Growthpoint, which of course came historically from the Investec stable, but it's really the largest, biggest, stablest, blue chippiest of the South African retail-oriented, commercial-oriented, industrial-oriented. They got it all. And they also, of course, have Growthpoint Australia. And then here locally, they own assets all over the show. They've done quite a lot of deals to buy other property funds that in turn had also, shopping centre and similar type exposures, V&A Waterfront, that kind of thing. So we're talking about flagship properties. Norbert Sasser is the CEO. Market capitalisation, 68.3 billion rand. Historic yield, we think, is about 5.4%. I'm not quite sure what it is going forward, but again, for those, would you buy those now? Tell us about this one.
Really, these have been priced off in terms of the yield and the distribution growth. So what you have seen, where they were doing a few years ago double-digit earnings distribution growth, that started to slow, high single digits. Now we're at 6% distribution growth, which I guess is largely
in line. Is that what they're forecasting for the future?
Correct,
based on their knowledge of their portfolio.
Exactly, and what they recently reported. So what you're seeing is quite a lot of soft areas of the portfolio and some strength. For example, the V&A Waterfront, it is an excellent asset, benefiting significantly from an uptick in tourism and I guess generally the Cape economy. So that was up strongly. Industrial portfolio performed very poorly, very low growth there. So all that, because they're so diversified, ends up in 6% growth, and that's really in line with inflation. So that real income growth that you would like from these assets, you're not getting at the moment.
Okay, but speaking of future political earthquakes, if there's a progressive sort of downgrade of South African sovereign debt, as we know there's that thing going on in the background, then what would happen to the property stocks? Because then you'd expect the yields on government bonds, the long bond rate to go up, I think, and then these things, the share price could go down.
Certainly.
Let's look at the share price, because how does that play out? You can see it's been a bit of an environment of uncertainty. So after the economic revival of the 2010, 11, 12 recovery, then you saw rising prices, falling yields on a global basis. But since then, it's been a bit confusing.
Well, I think we've seen more recently the government yields move up quite strongly. Obviously, when we had the Nene Gate in December, they fell off sharply, the property stocks. So they are very susceptible to changes in our bond yield. I think Growthpoint in particular, because it's such a big bellwether, so diversified, it really reflects the South African economy. So I would be very concerned about the impact on a downgrade.
Okay, so I'm also of the view that that's going to be more of a long-running sort of process event, and who knows? I mean, there are, of course, political risks, but there are also things that can go better politically. But my sense, I don't know, you go first.
So not at these levels. I think, it's all priced in. The yield is fair given the expectation for growth and the risks, so not hot.
Yeah, because remember, this is the show about hot or not in terms of stocks, in terms of buying and holding for the long term, for capital appreciation of what you own. So if the view is, yes, you're in some sort of different category and you want to own things for yield, you can do worse than own, these guys are
Fair
good,
enough,
Norbert's great, but not hot for now.